Hello, trading is closed on October 2nd, 2020. We'll always start with our disclaimer, then go into our calls. It's my plan for Monday. If we gap sharply in the undesired direction, the call is killed before the open. Can't guarantee my plan is going to work, so trade at your own risk. It's my Gmail address. Look for the pattern with the early high. There it is. Monday's pattern has the early low. We had a target of 33.86.72. We said unless we gap down sharply, it was favored to print. But I said gapping down sharply was quite possible because of the wave count. Here's what we said. Gap can't be ruled out. We couldn't clear recent highs. Wave count's compatible with the rally leg being over. We said to wait before the employment report before making a final decision. Turns out it wasn't the employment report that moved the market, but it was news about the president. Monday's pattern has the early low. We get to cross one target off the list, 33.2753 from this week. But we add, that was yesterday's target. So we just get to cross this one target from this week off the list. Well, normally this is a positive pattern, close near the high. When that doesn't happen, it leads to further weakness. This isn't what the pattern normally looks like, and the atypical appearance of the pattern would be eliminated if we were to gap up on Monday sharply, because Monday's open is a substitute for today's close. The other possibility, failure, is a straight line drop. Well, we got a straight line drop right at the open, and you could claim that was enough, but normally the whole day is a drop when that happens. That's not what I see, but it would all be made normal if we were to gap down smartly on Monday and undercut this low. I can't promise we'll have a strong gap Monday, but if we did, it would certainly be typical of the pattern on these days. In general, failing to get a new high like this is quite weak, and there are some other aspects we'll discuss which are quite weak in this pattern, and we have to invalidate them by gapping up smartly and taking out this high, because if we don't, we should be in store for much lower prices. Well, during the day we got an ultimate sell signal here. It worked. MEJT said this rally was false, would retrace. Said this drop was false, would retrace. That's all worked. Well, here's the daily chart. You can see how we go within the bar of all these lines. These magenta and white lines and the yellow lines, those are all Tom DeMark's TDST lines. You'll see how well they've worked. If we're in for a move down, we don't have to go to the next line down, but the next line down is at 3,047. And what's interesting about 3,047 is if this is leg A, and then we have a B, and we're in C down, you can set leg A equal to 78.6%, and you wind up pretty much with the same price, 3,047. Well, here's our daily chart. We have us in wave blue C down. I don't know how low it'll go, but typically it'll go at least to 38.2% of the rally as a retrace, and the 38.2% retrace is 3,047. So I suppose that could all be a coincidence. I can't guarantee it'll print, but let's say there are a number of patterns which would be satisfied if this drop went to 3,047. So far, we're dropping in clear threes. Here's an A, completed a B. There should be a C down. You could argue this little squiggle at the end was wave C. I think you're kind of forcing the count. If you do that, it has no relation to A. And typically, if you force the count's wrong. So this would argue for a drop. Well, Monday has the early low. Doesn't mean that you won't gap up. Now, Friday's action had a number of factors which should have been bullish, but they weren't. Now remember, Monday's open can substitute for today's close, but till that happens, we had a panic sell-off at the open, which turned out to be at the low of the day. That's normally positive. Normally expect to rally all day long. Usually what happens is people panic overnight, specialists have to buy, and they go long at a price where they're pretty much assuring themselves of making a profit. It usually leads to an all-day rally. That didn't happen. Drop was a response to a news event. News events, the rule is they get reversed quickly and completely. For now, at least, that didn't happen. The pattern of the day is usually positive. When you have bullish signs like this, and you don't have a bullish outcome, typically it fails in grand style. Unless we gap and promptly take out today's high Monday, I think we'll see lower prices. Doesn't create confidence that we dropped into the close, which normally follows through into Monday's open. It's even worse when you rally after the close because it shows that the amateurs are going long. As soon as the professionals leave, prices go up. That's not a good sign. And we have more evidence our bearish wave count is working. This, I don't like to use the word crash. Let's just say we have the potential for a huge down move early next week, particularly if we gap and undercut this low, which isn't a given. This is very negative and needs to be reversed promptly. Otherwise, look for much lower prices, in my opinion. Okay, so we have the early low Monday. If you're a bull, keep your fingers crossed. If you're a bear, this looks like you'll get a big payday, but until we open, it's not a lock. And that's today's call.